I want to continue down the rabbit hole with this ideology behind institutional interest. And I want to now roll over to showing you guys how these institutions are for a fact not only confirming their interest in the digital asset space by increasing their allocation in the coming months slash years ahead and confirming that in recent reports, but also making major announcements. So we're going to now go over this EY and Coinbase March 2026 Institutional Investor Digital Asset Survey. I want to read some highlights from this, which is going to take us into a panel discussion where a gentleman from a large investment firm goes on to talk about institutional interest in DeFi, and then take a look at some documents from other major consulting firms and large banks that just came out this week. So starting off here, this is from EY and Coinbase titled Volatility Drives Discipline, Not Retreat. The 2026 Institutional Investor Digital Asset Survey from March 2026. And I'm just going to thoroughly go through and read some of my highlights. All right, so you can see here the survey dates were from January 13th through January 30th, so relatively recent, and they surveyed 352 institutional investors, okay? And very interesting things to say the least, and I'm just going to again go through and try to read some of my highlights. It says 74% of respondents expect crypto prices to rise over the next 12 months, with nearly 60% viewing crypto as a top 3 opportunity to generate attractive risk-adjusted returns. Okay, again, and this is coming from 352 surveyed institutional investors. Here it says, thinking about the next 3 years, in which asset classes do you see the biggest opportunities? Private equity came in at number 1, cryptocurrencies came in number 2, and U.S. equities came in number 3 spot, right? So crypto sitting there at number 2. 73% of respondents intend to increase their digital asset allocation in 2026, driven by greater regulatory clarity, expanded availability of regulated products, and improved infrastructure. Okay, so that was just another net little tiny bullish segment from this. All right, so here's another one. It says 86% of respondents already use or express interest in stablecoins, and they are increasingly interested in using them for internal cash management and money movement. This is important when we go over to the announcement from SBI. Okay, this is where another one was important. It says 56% of respondents expect to engage with DeFi protocols in some way by 2028. 13% are already engaging, and 43% plan to, with primary use cases being lending and derivatives. So that was just another extremely bullish thing from this event or from this survey, because it just goes on to confirm, considering that we're in this downturn in the market sentiment, that these institutions surveyed this year are actually optimistic about the future trajectory of the crypto and DeFi ecosystem. Among those interested in tokenized assets, 11% are already invested and 62% plan to invest by 2027. 61% expect tokenization to have a significant impact on market structure. So outside of all the little tiny nitty-gritty details, this report from an institutional standpoint just goes on to give statistics on how these institutions are, in a nutshell, net bullish on crypto, and they're not skeptical and bearish. It's just that right now we're in a risk-off market environment. That leads me over here to this gentleman on this BitGo panel discussion that he was on from the iConnections Miami 2026, and he just goes on to talk about how institutions are interested in, they're starting to engage in DeFi. Take a second here and listen.
Starting to see a lot of not only all these milestones. Perhaps I'll add another one that is happening right now. It's unfolding right now, and it might be one of the most important, that we're starting to see a lot of not only centralized crypto businesses, but also traditional finance businesses starting to engage a little more with decentralized finance. We're starting to see the emergence of things like decentralized vaults as maybe an ETF 2.0 wrapper, because it provides a bunch of advantages over maybe the current ETF structure. You're starting to see probably the largest private credit fund in the world engage with a decentralized credit platform called Morpho. Starting to see the largest asset manager in the world engaging with Uniswap, which is the largest decentralized exchange. So I think I can see kind of the arc here going from ETFs and then stable coins, now probably reaching escape velocity. And I feel like there is another very exciting new direction that we're taking here that involves tokenized securities, tokenized assets, and all these interesting DeFi primitives. So I feel like the industry is engaging with DeFi in a way that it hasn't in a while. That's a trend that is unfolding.
And he is absolutely right for saying that. So, taking your attention over here to two recent documents. This document from BCG, again, one of the major top four consulting firms. This is from March 2026, so it is recent, titled Stable Yields on Stablecoins, How Yield Farming is Shaping Up as the Next Wave of Institutional DeFi. Shout out to the CYPRX researchers. So these are the types of documents that we read thoroughly through inside the private community, keeping our community members in the loop and ahead of the game as to what institutions are paying attention to. And this document here goes hand in hand with this huge announcement from March 18th, 2026 from SBI Holdings. So coming over here to X, I'm going to read some snippets of these two documents here. The document from BCG and from SBI, where I said here in this post, this is massive. Banks are starting to quietly confirm what DeFi users have known for years. SBI announced USDC lending at 10% annually as a licensed financial institution in Japan. Let that sink in. Traditional banks are now using stablecoins, offering yield products, and competing with DeFi returns, and they're doing it within regulatory frameworks. Even more important, they're openly admitting typical FX deposit yields are around 0.01% to 4%, while USDC lending can offer 5 to 10% plus. That's not experimentation, that is acknowledgement that the system is evolving towards tokenized dollars, on-chain yield, and blockchain-based lending rails. This isn't if anymore, it is happening. DeFi didn't just disrupt finance. It set the new benchmark, and now banks are racing to catch up. If you guys remember last year and in the previous year in 2024, me and Aqua were screaming, we are going to see banks offer double-digit yields on stablecoins. And when this next massive bull run happens, we are going to be able to retire off the yield that we're earning on just stablecoins, right? And taking a look at this. So first, the BCG document here, okay? This is what they said in their document. It says, decentralized finance, or DeFi, offers a range of ways to earn yield on crypto assets, including stablecoins. Yield farming is the practice of deploying assets into various DeFi protocols to generate returns. In summary, stablecoin holders' demand for yield is being met by the decentralized market. This is a major catalyst for the next wave of DeFi adoption, a period where an influx of stablecoin capital seeking yields could dramatically expand DeFi usage and bring institutional participants into the ecosystem at scale. We see this trend, this is again BCG, we see this trend already taking place by institutional consortiums of stablecoins. There are 12 major banks in Europe, such as BBVA, RBI, BNP Paribas, and UniCredit, DZ Bank, and DECA, etc., already participating in these things. And then we come over here to the announcement from SBI, all right? Here's the official announcement from the SBI Holdings website, and it says, President and CEO Tomohiko Kondo, hereinafter referred to as the company, a consolidated subsidiary of SBI Holdings. The chairman and president and CEO that operates a cryptocurrency exchange business is pleased to announce that it will launch the USDC lending service on March 19th, 2026, becoming the first licensed company in Japan to do so. USDC lending is a service in which customers can lend USDC, an electronic payment method, stablecoin, linked to the price of US dollars. To commemorate the launch, the initial offering will be a 12-week term with an annual interest rate of 10%. And even under normal circumstances, it is planned to be offered at a high annual interest rate of approximately 5% for a 12-week term, which is higher than typical US dollar foreign currency time deposits. Then down here at the bottom, it says the Japanese yen to US dollar and the general yield is around 0.01% to 4% per annum. On the other hand, USDC lending can provide a more consistently high annual interest rate. So you literally have a regulated institution promoting double-digit yields here, y'all. This is huge confirmation.
Yeah. And it's low key. Let me just share my screen. It's actually low key happening right now. So This is the Enosis DEX. We've shared this Enosis DEX plenty of times. We hold some of the protocol assets themselves as well, right? But this is, they got a slew of different products. They got pools and farms, right? But to highlight on their most recent ad is borrowing and lending. And as you guys can see here, you can lend out your FXRP and get 13.71%. Lending it out right now.
Screen? You went to a different screen?
Oh, yeah, I did. My bad. I didn't. Can you see it now?
Yeah.
Yeah. So, yeah, you can basically lend out your FXRP or you can lend out your wrap flare. Wrap flare is given 22% right now. And I think like both of these TVLs are pretty healthy as well, right? The wrap flare has 500,000 and this FXRP is 6 million, right? And you can borrow against this as well. Now, I don't know how aligned these guys are with, being compliant and regulated, but this is actually the best borrowing and lending APR I've seen for XRP, hands down, since coming across DeFi and just always talking DeFi. I think, yeah, I don't I don't know of another position that has been double-digit yields like this as well. So this is exciting to see, and this just got rolled out. Just recently. I just seen the post from Enosis right before we got on this call. So yeah.
Yeah, good stuff, bro. I mean, it's coming into fruition. We've been screaming at the top of our lungs. If you all don't know how to get your digital assets working for you, it's your first time in DeFi, you've been sitting sidelines for some time because you've been waiting on regulatory clarity. I feel like the announcement from SBI just recently that you can earn double-digit yield on your stable coins, and the fact that we highlighted a platform that's regulated on the XRPL where you can earn 8% on your RLUSD, right? There's no reason not to be earning yield on at least your idle cash. Maybe you're not ready. Go ahead.
No, go ahead. I'll share right after.
I was going to say, maybe you're not ready to earn yield on your actual digital assets, but if you just have cash sitting in a bank account right now doing absolutely nothing for you, you could still at least put that to work on regulated platforms right now in the moment.
Yeah. And peep this as well. So this was an update from Soil. Let's see here. So Soil, we've been over this, platform for going on 2-3 weeks now. I've shared my RLUSD positions that I've been testing out, but this is a brand new announcement that was just announced this week, and that's the XRP Vault is launching soon. So soon you'll be able to earn yield on your native XRP without leaving the XRPL ecosystem. And again, Soil Finance is a compliant protocol. So this is going to be the very first time that you can get your XRP actually working for you in a compliant fashion. So more to come on this.
You don't have to wrap it or anything?
No, it's the native XRP without going what is it?
Flare route, the flare
route, wrapping and all that shit, minting and vaulting and all that bullshit. Yeah, this is just native XRP straight from your Zamin wallet, as a matter of fact, too, because this is you connect your Zamin wallet to the Soil platform. But yeah, I'm excited for this, to be honest with you. I'm really excited.
Does it mention how much yield we're going to be offered yet or no?
No, not yet. But I mean, even if it's around 8 or 5%, I'm stoked on that. Like,
dude, if they could just give us 3.5% on XRP, I'd be happy with how much XRP I have, bro. Like,
yeah, facts, bro.
I've had hundreds of thousands of dollars sitting in XRP for like 10 years, If I could have just been earning 3% on that this entire time, I'd be chilling right now.
Yeah, you're about to get it working for you soon, bro.
110% be allocating a couple grand to this platform to test it out in the coming days ahead when they launch it, for sure.